only way you can kind of see and visually see all this stuff is just like a blueprint is, looking at an income plan. And then, sometimes people say, well, should I turn my Social Security on now or later? Well, let's look at the blueprint. Which one gives you more net worth at age 80 or 90? That's the correct answer. Welcome to Wealth Creator Radio, where we help people overcome the uncertainty of having enough retirement income. I'm your host, Eric Heckman, a certified financial planner with over 30 years of experience. We want you to enjoy life and not have to wonder where your money will come from and how long it'll last. My mission is to show you how to develop a personalized income plan so you can retire more and have worry less wealth. Here at Wealth Creator Radio, we cut through the noise and get straight to what matters. We understand that the world of retirement planning can be filled with confusing products, ever-changing tax laws, and volatile markets. That's why we're here to help successful people like you navigate the uncertainty and create a blueprint for a thriving, work-optional life.
Hi there. Welcome to our show. I'm Luann Fulmer. Today we're talking about a tough topic, and it's been in the headlines. You know what I'm going to say. All the rising global tensions and the conflict in Iran. So as you've been following the news, you might be wondering what this could mean for you, for your retirement, for your family, for your life savings. Well, today, Eric Heckman is here, and he's going to help us make sense of it all and keep the conversation focused on perspective and preparation. So here's our phone number that we want you to have handy as we go through our show today. If you have questions, certainly reach out to Eric and our awesome team at Heckman Financial, and they can give you guidance about your retirement plan. Here's our phone number, 800-454-1184. You may call or text the word visit if you want to set up an appointment. Maybe you just want to have a conversation. You can certainly do that. The other thing you're going to hear Eric talk about today is our toolbox, and you can get that too by texting the word toolbox to our number, 800-454-1184. And the show is available, everywhere that you get your podcast. Just search for Wealth Creator Radio. New show comes out every Tuesday morning. So happy to have you along with us. Eric, good to be here with you.
Yeah, no, definitely. Lots of stuff going on in the news, like you said. But we can kind of hopefully give people some context to how it affects them.
Right.
And their finances.
Eric, exactly. Yeah, exactly. So when you watch events like we're having unfold and, see all the headlines, what's your first reaction?
Well, obviously it's really unfortunate that we're going to be losing some of our military, service people, putting them in danger. And there was supposed to be this America First agenda, but this is not part of that. This is starting more conflicts and more things. So bombing Iran 2 times in 1 year, when Trump repeatedly said you can negotiate, you shouldn't be able to have to resort to that. So, obviously you have to watch out what people say because their actions are really what you have to pay attention to. And, obviously in terms of market fluctuations and stuff like that, these short-term, hopefully it's short-term conflict, I should say.
Yeah, right.
So assuming it's a short term, it's usually not a long-term thing on your financial picture. So usually there's not a monster, there's reason to react and overreact, right? And, not sell everything off or go to cash or, things like that. But, again, you should always have some money protected. You should always have some money safe. And so, there's definitely some things people should be looking for.
Now, how do you help clients get through situations like this without panicking? It's probably too early, but have you been hearing anything from them?
Luckily not too much. Most of my clients, they know not to overreact to stuff. It is one of these things where, like already to the conflict in Venezuela, and we don't know how that's going to turn out because we didn't put anybody nicer in charge that was more friendly to the U.S. So, and then who's going to be in charge in Iran and all those things. And, how does that all play out long term? So there's a lot of, questions on that, but how much does that really affect how much Walmart sells or how much Google does or how much, Apple does? A lot of these things don't really affect the major companies, so, and that's usually where most of your money is invested in the stock market and such, right? So, there is some effects. Obviously, oil markets are going to be affected by a lot of this because a lot of this is fueled for oil. And so that's one of the things is just, making sure, again, first of all, that you have some money available, right? You want to have that emergency fund. You want to have that 3 to 6 months of expenses sitting in cash someplace where you can go grab it, so you don't have to react. And if markets stay down, then at least you don't have to sell off stuff. If you are retired, you should have some good cash flow coming in from like what we call steady income sources, stuff that pays good dividends, good cash flow. And, you should also have some guaranteed assets that if you needed to sell off and take some out, that, you're not going to lock in any losses. So, if you have it set up right, this is not a problem. The problem is if you have it all in your 401k and all at risk, yikes, right? That's when we have to really worry. And so
Yeah.
that's the people that, have a lot tougher time in downturns.
Let's continue talking about the market. Okay, if I'm retired, my nest egg is all I have. What should I be considering right now?
Well, like I said, having those out, that allocation and the right types of assets. So if you've got 100% market money and the market's down, you've got 100% of no options. So that's not good. You need to have some money that is, like I said, protected and from loss. But there's some great options out there with insurance companies. There's some that you can earn up to even right now 9% on on an annual basis. Sometimes with the market and ones that index with the market. So there's ways to have some really good earnings without locking in low interest. And it's just a matter of looking what's out there, having a good portion, at least probably if you're retired. It needs to be at least 30 to 40% of your money. It needs to be, guaranteed from fluctuation because, you cannot have that money just all of a sudden drop and, you have no options, right? When you're retired and you need to take that money out. So, one of the things we built up here was this digital toolbox, and it's got things like, will your money last as long as you do? Kind of something we're talking about there, right?
Right.
Social Security timing decisions, and stuff about taxes, how to pay less in tax in retirement, even a copy of my book, Worry Less Wealth, and way to set up a time, talk with us at Team Heckman here. So all you got to do for that is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or click the link below.
We're so happy you joined us today. This is Wealth Creator Radio with Eric Heckman. If you are just joining us, we're talking about global conflict, how wars and political unrest around the world could impact your finances. So, Eric, I want to read you this. Fidelity recently released research on wars and markets. And one major point that they brought up, were international conflicts and how they have historically had little effect on long-term investment returns. Would you say that's true?
Yeah, I mean, there's definitely lots of times where we've had all these, obviously throughout the decades, right? That there's always some sort of thing that pops up, and obviously the most recent was the Ukraine war. When that started, that was a big deal in terms of headlines and stuff, and the S&P is actually up 60% since that started 4 years ago. So. That's a sign of resiliency, and even the European stock markets are up, from there, which of course they have a lot more effect on that region. So, yeah, I mean, there is a short term effect, like we said earlier, but long term, it's not usually a big deal.
Yeah. And you mentioned, the temptation for many people is to go to cash. Okay. Just, I'm going to sit on the sidelines until things calm down. But that's a dangerous strategy. Yeah.
Yeah, no, I mean, the problem with, anytime you sell, you have to do two things, right? You have to sell at the right time and buy back in at the right time. And, we saw that in the 08, 09 meltdown where, the people that did go to cash, well, when did they go back in? Some of them took 10 years and they missed a lot of growth. I mean, from about, it took about 4 to 5 years for everybody to get all their money back. And that was one of the, that was the biggest pretty much downturn ever. And, but they did get it all back if they stayed in. And those who bailed, most of them didn't jump in until things were already up way high. And so, now then you sold low and then you bought high, which is obviously the opposite of both of those things you're supposed to do. So,
Right.
so yeah, that's the tough part. But you also don't want to be stuck having to sell. So, again, that's why we have that information in their digital toolbox, give you some perspective, give you a little bit of education, and even set up a time to talk with us if you are worried and nervous about all this stuff. So, once again, all you do is text word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly with the link below.
Are you happy with your Medicare plan? Even if you are, what was good for you this year might not be what's best for you next year. The team at Heckman Financial can help you sort through all the options to find the best one for you. Call now, 800-454-1184. That's 800-454-1184.
Hi there, I'm Lou Ann Fulmer here with Eric Heckman. So happy to have you along with us today. I want you to picture that you are a master carpenter, okay? You go to a job site and you have all the best tools, okay? The best tools money can buy, but no blueprints. You're not going to get very far, right? You're not going to know what to do with those tools that you have. And Eric, a lot of people approach retirement the same way. They have tools like their 401ks and their IRAs, but no actual strategy to build that confident future. So help us understand this analogy, okay? What's the fundamental difference between having that portfolio of your financial products and actually having a true retirement plan, which is what you always talk about?
Yeah, no, the personalized income plan, or what we actually call a blueprint to worry less wealth.
Mm-hmm.
So that is, obviously a critical thing, because you've got all these different buckets, if you want to call it that. You got the IRA, 401ks, you got savings accounts and individual investment accounts, all these things. And where do you grab the money from first? Where do you take this money from, and so forth? And so there's a lot of confusion. The craziest one, just really, just from a human perspective, is how scary it is for people just to withdraw money from their accounts. I mean, it's just 30, 40 years of saying, don't touch that money, don't touch that money. And now all of a sudden you're touching the money. It's like, what? Hold it. No. I mean, and I literally have people like, I mean, they don't go into convulsions. I haven't seen that one yet, but, they really just have a lot of issues with it. And it's funny because I've warned people about that. And I've even had one guy who retired from PG&E, and he came back to me after a couple months, and he's like, oh my gosh, yeah, it was so stressful getting that money, I seen that money come out. And, so that's why you did it though, right? That's why it's there. So,
right.
But are you doing it the right way with tax wise? Are you doing it the right way to make sure it lasts? Are you, doing the right things to lower your lifetime taxes? All those types of questions, make it even more complex and more confusing, because first of all, you're just trying to figure out how to get a paycheck. And now you have to figure out all this tax stuff too. And so, yeah, it does get complex.
Right. Yeah. Without a blueprint to worry less wealth, you're just guessing. And that's why we urge everybody to give you guys a call, because you have a plan that puts it all together and will help answer all these questions that you were saying. Where do I take my money out first? How do I, help myself and not too many taxes and all that? So, the tools that we use during our working years, like you said, are just a shovel. We're just shoveling that money into saving, but not the same tools we need for retirement.
No, I mean, there's, the good old phrase of, just hang in there, right? Just don't sell, just don't sell. Yeah, that works for when you're working, but once you retire, you need that money. You need that money every month. You can't just unretire. and especially in Silicon Valley, if you've around here, you're younger, meaning less than 60, you might be able to get a job, but even 50-year-olds have a hard time. So, it'd be very tough in your 70s to go out and get a job, because, the markets are down. So you're going to, need to be withdrawing that money for one thing. And, and that makes the dynamics very, very different. And then, of course, once you hit age 73 or 75 and that required minimum distribution, you're required by law to take that money out. And so, yeah, if the markets are down, when you're having to take that money out, you're locking those losses in. And that's very different from when you're working, because, when you were funding money, if markets went down, you actually bought more shares. So it was actually a good deal in a way. And so here's the exact opposite. So yeah, you need to have a plan that protects you from those downturns, that makes it smoother, makes I'm going to pay the least amount of tax as much as I can. over my lifetime, not just 1 year. And so that all needs to have a plan for sure.
Let's look at the construction process. Okay. You're the builder. Okay. Um, Talk about how this is what you do. You help clients organize all their assets so that they're not using a hammer when they actually need a saw, and you show them the difference.
Yeah, exactly. So, I mean, there's lots of strategies that can work, a lot of things that can work short term, but what works long term? Lots of times traditional advice says, keep deferring your money. And then all of a sudden you go from the 12% bracket to the 24% bracket. Well, you've just now doubled your tax. That's not smart. And so, you have the only way you can kind of see and visually see all this stuff is just like a blueprint is, looking at an income plan. And then, sometimes people say, well, should I turn my Social Security on now or later? Well, let's look at the blueprint. Which one gives you more net worth at age 80 or 90? That's the correct answer. I don't care which way you want to go. It's just this is the one that mathematically and tax wise works the best. So, whichever one that is, then that's the right tool for the job. So, but without that clarity and without that way to test it, then you don't know which one's going to work. And then you're kind of going back to what you started with, right? Where you said, here, build something, build a house for this person, even though you have no blueprint. And it's like, okay, but it probably won't look like the person may have wanted. And so, so that would not be good. So, again, that's why we've built that digital toolbox for people to, just go in there and get some education, be able to read about, will my money last as long as I do? Am I paying too much money in tax and in retirement? And copy my book, Worry Less Wealth, and way to set up a time to talk with us on the phone. Here at Heckman Financial. So all you got to do, super simple, just text word toolbox 800-454-1184. Again, toolbox 800-454-1184, or click the link below.
All right. We thank you so much for joining us today. I'm Luann Fulmer, and this is Wealth Creator Radio with Eric Heckman. So, it seems clear creating that comprehensive retirement income strategy is going to require a special set of tools and knowledge. So, how do you help someone determine if their current retirement plan is optimized for all these new challenges they're going to face in retirement?
Yeah, well, one problem is that it's kind of like an adult going to a pediatrician. You could do it, but it looks weird. You're the tallest one in the room, and you might not even be able to sit on the tables because they're smaller and all that stuff, right? But I guess you could do it. But I find a lot of people, the advisors they're using right now, are really just investment managers. They're not looking every year at their tax return and giving them advice on how to pay less in taxes. They're, a lot of times they can't even give you any tax advice. So that's really scary. And then lots of times they're, they have no protection for downturns. They're just like, okay, well, you'll lose less on some assets. Well, losing less is not that's not a strategy, right? You would not
No.
keep a head coach, employed if they lose less. Only if they're winning a lot, not losing less. That's not. Well, they only lose 2/3 of the gains, not 80%. Well, no, that's not good, right?
Yeah.
So lots of times people are just set up with the wrong type of person, and they need to have better advice, somebody who specializes in that shift from working life to retirement, because again, all the numbers are switched. Everything now matters because of you're taking the money out, you're doing withdrawals. Now taxes are the number one thing to be paying attention to. And that taxes are the number one thing that retirees pay in retirement. It's the number one expense, even more than healthcare. So, if you're not focused on that, then how are you really helping people?
Okay, so there's a lot going on right now in our world. We've got the new tax bill, a lot going on with market volatility, even inflation. Someone listening might be going, how can I tell if I do have the right advisor for me? Is there an easy way to figure this out? Maybe getting a second opinion?
Yeah, I mean, getting a second opinion is great. I mean, one thing is, are they asking you for your tax return every year? That's one clue that they're not giving you or are giving you tax help. If they're not asking for the tax return, it's pretty clear. They don't give you tax advice. Do you have some of that money protected from loss where it cannot go down a good 20, 30%? If that's not the case, then yeah, I would say get a second opinion. And that's one of the things that we can do here at Heckman Financial is we can, just show you the path that you're on. So we have a first meeting called Worry Less Wealth Visit, where we just ask you what's concerns, questions you have. And then if it makes sense for us to go that second one, we'll actually do the analysis. We'll show you the income plan you're on. And if you've got, a road closure up ahead, or you got somebody about to hit you from the side or something, we'll tell you what's going on the path that you're on. So, again, if you want to get access to that, all you have to do is text word toolbox to 800-454-1184. Again, text word toolbox 800-454-1184, or click the link below.
Do you know whether your retirement plan has any weak points? Discover ways on giving your financial future the proper tune-up. Simply go online to wealthcreatortoolbox.com to gain a better understanding in taxes, Social Security, and other ways to manage your portfolio. That's wealthcreatortoolbox.com.
Hi there, I'm Luann Fulmer here with Eric Heckman, president of Heckman Financial. And so happy to have you with us today. We've been discussing how to turn a mix of your financial tools into a fortress of security. But, even the best built houses are going to face threats from the elements, and specifically in our case, we're talking inflation and taxes. So, Eric, people call inflation the silent demolition crew, okay? Or the silent killer, or whatever you want to say. How does a static retirement plan fail when faced with the rising cost of living?
Yeah, well, doing this for 30 years now, I actually get to see what's happened to my clients and what they say during this time frame. And yeah, I have one client that, she had no idea that after about 15 years, her expenses all have doubled. And under normal inflation, that'd be more like 20 years. Now, sometimes it depends on, luck of the draw. What are you spending money on? What types of things went up, right? Healthcare goes up faster, typically, historically. So there's definitely some things that seniors pay, a lot more tax on and that stuff. And when you're retired, you're gonna, have that inflationary tax hit you and get higher and higher. Hopefully you pay off the mortgage, but a lot of income doesn't go up as much, and so Social Security tends to lag inflation somewhat, and so that's one of the things you have to be paying attention to is are your assets growing more, or do you have some stuff for growth along with having stuff with income, and you also don't want to have that same income 20 years from now. Just think whatever you made 20 years ago. Would you still be happy living on that today? Probably not. And so,
Probably not.
we need to have a plan for that because it is, whatever you want to call it, stealth tax, hidden tax, lots of different things. But it's definitely stealing some of that money and making everything more expensive.
Yeah, I think back to when my husband Bobby had his first job, and we were so excited about how much he was making. Oh my God! If we had that amount now, we would be struggling. But I do want to bring up Social Security. You touched on Social Security. It is one of the few assets where they do adjust for inflation a tiny bit. How do you help your clients optimize Social Security?
Yeah, well, Social Security is getting tougher and tougher because when I started in the business, in the 90s, they said Social Security was going to have issues in the 2030s. And that sounded like so far away. And right now, I recently got my own Social Security report, and it says now 2034. And they changed the phraseology. Now they'll say they'll pay $810 for every $1,000 of benefits, which is a super complicated way of saying that they're going to give everybody a 19% pay cut.
Interesting.
And so that's if nothing changes. Well, it's getting closer and closer to that. We're 8 years away. So it's getting scarier and scarier. So that's one of those things where Social Security does keep up with inflation. It does have that cost of living. And so you do want to make sure you get the most. But again, you do want to make sure you get it. And so I wouldn't say just go turn it on just because, there may be issues. I would say still you want to have a plan. But sometimes it makes sense to turn it on sooner because you can then let your other assets grow that are most likely growing more than Social Security. So lots of times people do the wrong analysis with Social Security. They just try to maximize Social Security dollars. But again, we're maximizing a lifetime income for the person and which one gives them the most net worth. And that's the one we want to, really take care of. Because if getting more Social Security now gets you having more money that's growing at a faster pace, you'll actually outpace inflation even better by using those dollars, not your own.
That's what I love is you look at the whole picture and you say that this is what's going to help you in the long run. And I love that. So a lot of people, Eric, assume that Social Security is tax-free, but that's not the case. So talk about how the 2025 tax law affected those benefits.
Well, first and foremost, it did zero. I'll be making it super clear. If anybody says they did anything to eliminate taxes on Social Security, that is outright lie. They did not change a single thing on Social Security taxation. What they did do is if you're 65, regardless if you have Social Security or not, you might get an extra $6,000 standard deduction. The reason why I say might is if you're single, it starts phasing out at $75,000 of income, which includes that Social Security money. and then if you're married, it starts phasing out $150,000. So a lot of people may get it, a lot of people may not. It had nothing to do with you being on Social Security or not, because if you're still working and you're not going to turn on Social Security till 70, you still get the $6,000 senior deduction. And if you're 62 and turn on Social Security, you get no extra deduction. So again, proof that they did not change that. The worst thing about Social Security taxation is they first started taxing in the 80s, then they raised it a little bit more in the 90s, but they never, ever, ever indexed those with inflation. And so the rich people of the 90s, so those who made $25,000 single or $34,000 married, speaking of inflation, that was rich in the 90s. Those are the same numbers today. So I've got a lot of clients where just their Social Security alone causes their Social Security to get taxed, regardless if they take out other money. So it just count on it being taxed. They don't tax 15% of it on the federal side, which is nice. And most states don't tax it. So it is still fairly tax friendly, but not like people think. It's not tax free. Right.
Okay, so with this whole complexity of the one big beautiful bill that you're just talking about, people are going to go, is my plan optimized? How do I know? Tell us how you help your clients evaluate their current tax strategy, Eric.
Yeah, so the nice thing is once you have that blueprint to worry less wealth, you've got that lifetime income plan, and you see where your money is going to come from year by year by year. We can see taxes year by year. We can see what will happen when you hit your mid-70s, either 73 or 75, and you have that required minimum distribution. It's scary how much people's taxes go up by then. And so the nice thing is we've got a chart where you can look at year by year what's your tax rate's going to be and what's your lifetime tax. And then what we can do is say, well, what if we change some of these things? What if we tweak something? What if we turn on Social Security here versus there? Things like that. Does it lower your lifetime tax bill? Does it increase your net worth? These are things that we want to look at. So it's really easy inside, a piece of software that has that. And when you're looking at everything, the hard part is really tough for just a regular consumer to be able to do that. And so that's why we're here. We can help people go through that planning, figure that out, and, get a lot more information. So, if you did want to set up a time to talk, all you have to do is text the word visit to 800-454-1184. Again, text the word visit, 800-454-1184. Or click the link below.
And we're so happy to have you with us today. I'm Luann Fulmer here with Eric Heckman of Heckman Financial, right here in Silicon Valley. He is a certified financial planner helping people have remarkable retirements. He's been doing this for over 30 years. And so this type of tax analysis and, this blueprint to worry less wealth, this is something you are offering to our listeners right now. So I love that. A lot of people calling in about these things, Eric?
Yeah, no, a lot of people call in, about lots of different questions. And so sometimes when we do that first phone call is what we call our worry less wealth visit, where we just find out what are you worried about, right? What are your concerns? Is there something quick and easy we can just help you with? And my team will, work on that. If it's, something that's, more complex where you need that blueprint, then that's when we set up that time. We don't actually even charge a fee for that. We actually, give up. It takes about 4 or 5 hours of our team's time to, prepare everything, and then meet with you and go over it all. And once you can see what where you're headed, see what's working, what's not. Then it's up to you if you want to work with us or not. So we either decide to work together or part as friends, but it's a very simple process. So, yeah, I'd really urge people that are, if they're 55 to 65, you definitely, that's the time frame. You really should be taking action. So, again, if you want to get a little bit more information, just text the word visit to 800-454-1184. Again, text the word visit 800-454-1184, or click the link below.
Be sure to like and subscribe to Wealth Creator Radio so you can stay up to date on ways to build your wealth and create a retirement you and your family will enjoy for years to come. Like and subscribe today and create your wealth for tomorrow with Wealth Creator Radio.
Hi, we're so glad to have you with us today. I'm Luann Fulmer here with Eric Heckman. And I do want to remind you that you can catch this show on podcast. And our podcast comes out every Tuesday morning. Just search for Wealth Creator Radio wherever you get your podcast. Search on YouTube. We are there for you. Fresh new show every Tuesday morning. So we are going to get into our mailbag questions right now. We always bring these up on our show. Eric, I know you get questions all the time. Wherever you are about, should I do this for my retirement or whatever? So we're going to bring these questions right now to our show. And I have a question for you from Cindy. Are you ready to go?
Yep, let's go.
Okay, Cindy says, I've only been retired a couple of years. I'm really worried about spending too much right now. It seems really irresponsible to go crazy with spending my money, but I also hate I'm wasting my free time and not really getting to do anything. What should I consider doing about this? She asks.
Yeah, Cindy, well, the big thing there is having a plan. And one of the realities that most people kind of don't think about is there's kind of like 3 timelines when you first retire. So the first one we like to call your go-go years. Not like a go-go dancer, but,
we all remember those.
Yeah. This is when you're going to be doing all the bucket list stuff, right? That might be the river cruise. It might be Machu Picchu. It might be, visiting national parks, whatever, right? And a lot of times those will be the more active stuff because, when you're younger, you can do more stuff. After maybe 5-10 years, then you kind of have the slow go years. These are where, okay, maybe you're just going to do a cruise with bus tour. You're not going to be doing hikes and other things, right? Because you're a little bit older. You've seen a lot more of the stuff. A lot of that bucket list items have been checked. And, then you go into the third phase, which is you could probably go someplace, but you probably won't. So, those are the, the won't go years. It does happen. And, maybe that's when you're spending more time with family and hopefully grandkids or whatever. But, you want to definitely plan for that. So you want to have, I like to call it a fun fund. So the fun fund would be, that money blocked for those trips, blocked for those activities. And if you have that as part of your income plan, it's really easy to see, so maybe you do that for 20 years or 15 years, you can see how that affects things and make sure that your money's going to last. But yeah, it sounds like Cindy doesn't have an income plan. And without an income plan, it's really tough to see if you're on track or not.
Right.
It's kind of like going down the freeway, but there's no signs and there's no GPS.
Yeah.
You're just trying to do it off of geographical sites or something. And if you've never been there before, good luck.
Yeah.
Right.
So, yeah, that is scary.
So you want to have some guidance and you want to have some play and some knowledge of where you're going and making sure you get there.
Yeah. And then she can be more confident about, okay, I'm okay to do this. And not be nervous about, I shouldn't be doing this, Yeah. That's excellent.
Yeah. I mean, most people I find in their 80s are like, why didn't I go do more stuff?
Right.
So,
yes. And I don't want to be that way. I agree with you. Yeah. My dad wanted to do some things and he never did. And I wish he would have. Yeah. So, okay, we have another question. This is from Dave. And this is interesting. He asks, what's the difference between helping maximize your Social Security and optimizing your benefits? I've heard people talk about both, he says.
Yeah. Yeah. So one's getting the biggest dollar amounts and one's doing what's best for you. I guess is probably the best way to think about that.
Okay.
So, really, most people you always hear, most talking heads in the industry or whatever say, wait, turn on your Social Security as late as possible.
Yeah.
I find that almost probably 2/3 of the time is actually incorrect. So
Really?
So when I look at it inside an income plan, And, we can easily do the numbers. So, okay, you're going to retire at 65 because you get Medicare, but your full retirement age is until 67. So should you wait? Should you wait till 70? Well, the way I do the analysis is which one has more net worth at 80 or 90? That's all I care about is, which one has you having the most money. And
Okay.
lots of times if you wait, I mean, especially if you retire at 65 and you wait all the way to 70,
Mm-hmm.
that's probably 150,000 that you didn't get, that you had to take out of your own assets
Okay.
just to get that $1,000 more a month.
Hmm.
Well, that may come back, but it may actually never make it back because of you had to spend down so many other assets. So,
Right.
that's the part of the financial equation that people are often missing is they're
Yeah.
not including, those numbers. And so that's one of the key things to be looking at and saying, oh, hold it. Now I should, it does make more sense to start it earlier.
Mhm.
Now, if you're starting super early, sometimes it may not, but it depends on what age you're retiring. And if you're married, there's some special things there too, because which spouse should start earlier, which one should
Right.
wait later. Usually whoever had the higher earnings, you want them to wait the latest.
Right.
So yeah, that's again, super easy inside an income plan. But again, if you don't have that income plan, really hard to plan. So guess what
True.
the answer is? Get, start
Get
the
some.
blueprint to worry less
Yep.
wealth and get
Yep.
that plan going. And so one of the things we've set up is actually a toolbox designed for some of that information. So will your money last as long as you do? Very good report. Social
Mm-hmm.
Security timing decision,
Right.
another
There you
good
go.
one, right? So,
Mm-hmm.
but a copy of my book, Worry Less Wealth, and a way to set a time to talk with me, Eric Heckman. So all you got to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or book directly and download directly online at wealthcreatorradio.com.
And we're so happy you joined us today. I'm Luann Fulmer here with Eric Heckman. We're digging into our Wealth Creator mailbag today. Another question, and this is kind of a unique one as well. This is from Brett. He says, I don't understand people who want to retire early. I'm 68 and I don't feel like stopping and doing nothing all the time. I'm not interested in nonstop fishing trips or vacations. That just sounds lazy, he says. What kind of planning should someone like me be doing? I'm interested
Yeah,
in
no.
hearing what you have to say.
Yeah, workaholic, right? So,
Yeah,
no,
yeah, oh,
I do have a lot of clients like that.
yeah.
Obviously, if you just see presidents in Congress, it's insane how many
Uh,
people we have that are over 75. It's a
yeah.
huge percentage now.
Still working, yeah.
So,
Here's what it is. They don't.
yeah,
Here's why they can work so long, Eric, is because they don't do a lot.
there you go. Right.
They don't get things
So,
done. Sorry, just kidding.
yeah, no, but definitely. So, yeah, I mean, I've had people where it's like, oh, well, I want to do my fun job now.
Yeah.
And so maybe they'll do a startup. Maybe they'll do something that's, not necessarily for the money, but for what they enjoy and like. So that's one way to do it. But even if you are still working, I mean, if, I got a client in NVIDIA, he's in his mid 70s and, he's not really intending to stop, anytime soon. And so it's just more, okay, well, at 70, you have to turn on Social Security or else you're just donating the money to the government. So you
Right.
have to
Yeah.
figure out that tax plan. How are you going to, do that? Your required minimum distributions if you're still working and all, so you have to do a lot of tax planning
Right.
if you're going to still be working and making that much money and such. So,
Mm-hmm.
but nothing necessarily wrong with it. But at some point also, your body may not let you work anymore. I mean,
Yeah.
there is the reality of sometimes you just get older or you get heart attack, stroke, whatever. And yeah, you may not have an option. And so you
Right.
do want to still plan just because of you never know what will happen there.
Okay. Very good. So still come in and talk to Eric because he can help you with those tax strategies. Okay. Last
Yeah.
question. Yeah. This is from Janet and Rich. Janet and Rich, a couple. We've been thinking for years about our dream retirement. We're ready to make it happen. We have a retirement home. Our retirement home search narrowed down to 2 communities. We've reached out to a realtor to help us make a purchase. Is there anything we need to double check before we pull the trigger on our dream retirement home?
Yeah, well, two things. One is I'm a big fan of doing short-term Airbnbs or short-term
Yeah.
rentals in those communities. So, do that for a month or 2 or 3 in each spot. Do it in different, maybe the less ideal time frame. So if it's a hot
Mhm.
place, do it in the summer. Or you're going to still want to be there. If it's
That's
a
a good
cold
point.
place in the winter, stay there during the winter. Get a
Yeah.
reality check if you really
Yeah.
like it. And then also have a plan for what's the cost. Are you going to sell your house? Are you going to pay all the taxes, or how are you going to get out of the house? Are you going to keep it as a rental? There's a lot of things there. So how to properly plan is a big thing on that part too. So, again, that's why people should set up a time to talk with us. So if you want to set a time just to talk real quick and answer some of these questions directly, you can set up a Worry Less Wealth visit by just texting the word visit to 800-454-1184. Again, text word visit 800-454-1184, or book directly online at wealthcreatorradio.com.
Imagine for a moment that an intense storm is pounding your house. Will the roof leak? Will the siding peel away? Will your basement flood? If your house is properly built and maintained, you'll be fine. But what about your 401k or your investments? The stock market has had a great run the last few years, but is its current turmoil making you feel uneasy? Are you confident your portfolio is built to weather the financial storm? Now may be a great time to have your retirement plan inspected. Call Eric Heckman of Heckman Financial at 800-454-1184 now. Eric will examine your portfolio and show you if your investments are in need of some weatherproofing. Call Eric Heckman of Heckman Financial today at 800-454-1184. That's 800-454-1184. Investment advisory services offered through Heckman Financial Insurance Services, Inc., a registered investment advisor.
Hi, I'm Lou Ann Fulmer here with Eric Heckman. And every week on our show, Eric and I often discuss challenges and risks that exist in retirement. And right now, this part, Eric's going to give us an example of, what someone has done and experienced a retirement obstacle, kind of, telling us things maybe we should not do. So, all right, Eric, tell us about this financial fail.
Yeah, I mean, this one's a little bit more general, I guess, is really just all the bubbles that we've seen come and go. I've seen a lot of clients or a lot of people I met with that weren't clients of mine more often than not, where they had a ton of money. Sometimes they just got lucky. They just happened to buy the right stock, and it went from, I just met with somebody who went from $1 million to 1.3 million. And time he finally started selling some off. But I've met with somebody that had it shot up and then went right back down. And so, one of the things is lots of times people ask, well, why do bubbles happen? Why did people, why were people not smart about what happened and such? Well, how could they have made those decisions? Blah, blah, blah. Right. But really what happens is all these bubbles that happen over the time. So if you talk about the .com, if you talk about, the real estate meltdown, all these different things that's happened is we all think that we're all playing the same game when we're buying a stock. When we think we're all buying it for the long term. But what happens is as the stock gets hotter and hotter and hotter, more and more people buy it for short-term gain. And so what happens is once all those short-term people get to be a bigger number than all the long-term people think it's great because look how many people are buying it, but they're not buying it for a long time. They're buying it for maybe a day, maybe a week, maybe a month. And so you think it's, even though it looks overvalued, you say, oh, well, all these other people are buying it, so it must still be good. And that is totally incorrect. So that, that's one of the things where you kind of go, okay, well, how can you fix these, right? How can you do some stuff to prevent that? And the simplest thing that I've told people for the last 30 years is just put, limit orders on things. So I've got a lot of clients that, work at Apple, work at Google, some of these places that, have done fantastic over time. Now you don't want to just dump and run. I just met with somebody who been at Google for about 20 years, but he would always sell the stock right away. Well, some of his coworkers have a couple million more than he has because of, or several, because they held on to it. And, a lot of times you do want to sell, but how do you have that, middle area, right? Mm-hmm. And so one of the simple things is just have a stop loss where it says, okay, if it drops so much at a certain number, it'll sell. And then also have a limit order. When it goes up so high, it'll sell. It doesn't have to be all the shares, just, some part of it. So as long as you keep making it real, I've got one client that's been in Apple and we've been doing it for the last couple of years and he's getting close to about $300,000 a year that'll be getting in retirement just from all the places we've moved his money over these years. So he's almost to the point where he doesn't care what Apple stock does.
Huh.
And once you have that freedom, you can be retired and enjoying life. Thank you for tuning in to Wealth Creator Radio. I'm Eric Heckman, and it's been a pleasure guiding you towards a more confident and secure retirement. Remember, my responsibility is to always do what's right for you, our client. Together, we can cut out that fancy-sounding financial jargon that doesn't help and focus on what truly matters for your financial future. If you're ready to take control of your retirement planning and build a personalized income plan, contact us at 800-454-1184 and text the word Toolbox to schedule a complimentary consultation. If you're looking for more resources and tools to build your retirement future, don't forget to check out that Wealth Creator Toolbox, your toolkit for a secure and confident retirement journey. Until next time, retire more and worry less with Wealth Creator Radio.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.